All right. Hi, everybody. Here we go. All right. It's Kathy and Laura and Caitlin from LAZA Properties, and we are here with our favorite lenders. We have Brett and we have Seth from Movement Mortgage. So we're in their new digs, sort of, and we wanted to talk a little bit about the interest rates today because everybody's asking about them, what's going on, what's happening. So we will just hand it off, see who wants to talk about what's happening.
Well, it's always great to see you ladies.
You guys too. You guys too?
Your awesome colors.
Our pink.
Yeah, so we've all been working with a lot of first-time home buyers, and what we're seeing is a complete rate of change in regards to where interest rates have been. I think we were just discussing before we got on the call that rates are still low. They're just higher than they have been, and it's the rate of change that has caused a lot of the pain points, which is it's been such a big increase so quickly.
And I think that's the problem. I think our first-time home buyers are younger and haven't lived through all the things that we've lived through. So, I've only been in real estate for 7 years. Laura has a few more years on me. And just as adults, we bought when the interest rates were 7 and 8% and even 12 and 13%. So everybody's freaking out about it going to 5, but truthfully, it's not ridiculous. It's just normalization.
Where are we right now, by the way?
We're in the low 5s, high 4s.
Okay.
And so I would tell as a real piece of advice for any first-time home buyers that it's just a time to check in with your mortgage banker, make sure that what you're looking, your monthly payments work, and you might have to readjust your purchase price. But we do believe rates, hopefully stabilize, and these are, as you said, compared to the late 80s we were discussing.
Yeah, the two oldest that are on sitting, I'm the oldest one in the group.
Well, it was my husband that had the 12% interest rate.
When I was 5 years old,
that it's not always, the world isn't always coming down. It's just a normalization into a rate environment, but it is a time to educate yourself and to make sure you're re-looking at those numbers.
And are the rates better the more you put down? Like if you put down 10% or 20%, are you going to get a better rate, or is it just kind of rate according to your credit score, or?
Very highly correlated to your credit score, and for the first-time home buyers, that's what the first-time home buyer program is. It allows you to put less down, get the good rate, and the subsidized mortgage insurance. That's what a first-time home buyer program is, and so that's what you should always be looking at: CHAFA, Home Possible, Home Ready.
Yep.
Mass
Those are
housing,
nationwide. Yep.
Massachusetts.
Any bond program for the state you live in. Yep.
So I think that's kind of what we wanted to get across today. So the people that it's impacting the most are the people on the lower end. I had a buyer who was looking under 200,000, and she was looking at condos, so you have to take into consideration the HOA fees, but when the rates started creeping up, it kind of kicked her out of the game. So if you're at a higher price point, it impacts you, but less so. So, and again, if it's credit scores, they're going to make the biggest difference on the rate that you get. That's what you want to keep in mind. And if you can use the federal programs, use the federal programs.
So pay off those credit cards.
There you go.
What are some other good tips?
Well, I wanted to give some real math to this. So for every $100,000 you're financing, compared to 3 months ago, you're looking at $75. So for a $200,000 purchase, which kind of where we're focusing on for the first-time home buyer, $200,000 to $300,000, you're talking to about $150 to $225 a month. You're talking about a 10% increase in your cost of borrow,
Okay.
which is material, but as we're saying, we think it's probably more on the normal side of things.
Okay, that's some concrete numbers to kind of think about when you're shopping. And like Laura said, you should really be checking in because it has changed so quickly that if you got your letter of approval 3 months ago or 4 months ago, your numbers may be different. You may
They
not
are
be shopping.
different.
Yeah,
They
you're
are.
not
And don't
shopping.
go out and buy a brand new car.
Oh yes. I mean, we joke about this in real estate all the time, but when you are shopping for a house, you don't go pre-order all the furniture, you don't go get a new car, don't open new credit cards.
You always want to call your lender if, in fact, you have to open up new lines of credit. And
Okay.
Make sure that they're aware of what's going on, and make sure that you still qualify if, in fact, you have to go buy a new car or something like that.
Yes, God forbid it happens while
The
you're.
car is the key,
Right.
Yeah,
right?
that's
If
the
you're
biggie.
if you're in a $450 a month car payment and you're lease or your car is due and you're looking at a new car, maybe, you know, because of the rate change, and if you're really committed to buying, maybe get into a $350 a month car payment.
Yeah. Or take
That
the
will
loan.
make up, you know, a portion of,
Right.
of this rate change.
Yep.
Things like that, really granular, you're gonna have to focus on in this market to make sure that monthly works for you. It's
Yep.
always about the monthly expenses on a global basis, not just the mortgage, the
Right.
car, the student debt.
So as you're hearing this, I think people only think to call their lender when they need that letter, and there are some things to have a conversation before you go do that. How can I get situated? So, you know, you're not ready to buy today, but you're looking down the road. Here are the things they want you to line up. So there are some things, some to-do steps that they can give you.
And to just speak quickly on the credit too, you know, we have, you know, basic good practices with credit, but if people think that they're on the line, the best thing to do is have a lender look at their credit, because we do have the ability to rescore and do some short-term modeling to help people's scores increase.
Okay.
Yeah,
That's
inside of a
awesome.
billing period.
I
you
didn't know that.
Yeah, we
Okay.
can run algorithms and stuff like that to help people.
Cool.
Nice.
Very cool.
It's a fancy word, Seth.
Yeah. This is a mortgage
Are you
thing, so I had to throw
educated?
something.
You must be super educated.
This is the thing is, I used the word, probably couldn't even spell it.
On that note,
So this
Just
is why
kidding.
this is why we enjoy our company. So this is again, we have Brett and Seth from Movement Mortgage, and you know, we can answer a lot of questions for you. Reach out to Laura, Caitlin, myself. We will leave some contact information under this post, but hope everybody's enjoying the beautiful weather, and we'll talk to you guys soon.
Thanks, guys.
Thank you.